Hello, everyone. Welcome to the market opening bell for Tuesday, August 26th, your 10-minute guide to the stock market. Hong Kong stocks soared on Monday. The Hang Seng Index opened 267 points higher, then surged further, peaking at 579 points to hit 25,918, a near four-year high. It closed up 490 points or 1.9% at 25,829. The H-share index rose 168 points or 1.9% to 9,248, while the tech index jumped 177 points or 3.2% to 5,825. Total market turnover spiked to 369.6 billion Hong Kong dollars. Southbound funds, however, net sold 13.76 billion Hong Kong dollars of Hong Kong stocks. Among them, net buys included Alibaba, totaling 586 million, Kuaishou 471 million, CTE 407 million, Oriental Selection 202 million, Tencent 180 million, Dongfeng Group 149 million, and Meituan 112 million. On the flip side, net sales hit tracker fund totaling 2.352 billion, Xiaomi 1.525 billion, SMIC 811 million, and Hua Hong Semiconductor 129 million. Data shows southbound funds have been net buying Tencent for 7 consecutive days, totaling 6.213 billion Hong Kong dollars. Meituan for 4 days, totaling 2.647 billion. CTE for 3 days, totaling 1.354 billion, and Kuaishou for 2 days, totaling 1.644 billion. Meanwhile, Xiaomi faced net selling for 2 days, totaling 2.427 billion. Technically, the Hang Seng Index broke through the double top at 25,736 and 25,766, nearing 26,000, with a 9-day RSI of only 69, not overly strong, even if it breaks 26,000. Don't expect a sharp or massive rally. Next targets are 26,200 and 26,560. In mainland China, all three major indexes hit new highs. The Shanghai Composite rose 1.5% to 3,883, up 58 points, while the Shenzhen component climbed 2.3% to 12,441, up 275 points. Combined turnover for Shanghai and Shenzhen reached 3.1411 trillion yuan, up 594.5 billion yuan from the previous day, marking the second time in history after October 8, 2024 to surpass 3 trillion yuan. Turnover often leads indexes in prices, so breaking 4,000 is just a matter of time. The RMB central parity rate broke through 7.12, hitting a 9-month high of 7.1161 against the US dollar, up 160 pips from the previous session, the highest since November 6 last year. The Hong Kong dollar near the 7.8 midpoint, with the banking system balance expected at 53.959 billion Hong Kong dollars on Wednesday. On the market, Alibaba rose 5.5% to 124.5 Hong Kong dollars. JD.com gained 4.3% and Meituan climbed 3.3%. The NDRC, SAMR, and CAC drafted the Internet Platform Pricing Behavior Rules, draft 4 comments to regulate platforms' pricing practices. The draft prohibits e-commerce platforms from forcing merchants to lower prices, offer cashback, set prices lower than competitors, or use auto-pricing systems. Still, to maintain market share amid shifting consumer behavior, major platforms are likely to keep some subsidies to secure their positions. In the auto sector, Dongfeng surged 54.1% to 9.2 Hong Kong dollars, driven by its Voya H-share listing and privatization of remaining businesses. How to understand this spike? Dongfeng's H-shares, excluding domestic shares, will be privatized at 6.68 Hong Kong dollars per share in cash, with shareholders receiving 0.3552608 Voya H-shares per share. Voya will list on the Hong Kong EX via introduction. Beyond the $6.68 cash, potential gains depends on Voya's value. The announcement, unusually detailed, noted a median valuation of 11.735 Hong Kong dollars per Voya share, implying each Dongfeng X share is worth 10.85 Hong Kong dollars, which means $6.68 cash plus $11.735 times 0.355. For earnings, Haidilao reported first half revenue of 20.7 billion yuan, down 3.7%, with restaurant revenue at 19.177 billion yuan, down 6.9%. Net profit fell 13.7% to 1.759 billion yuan, impacted by a drop in table turnover from 4.2 to 3.8 times per day, an adjustment in new product and scene models. Earnings per share was 32 yuan, 0.32 yuan, with an interim dividend of 0.338 Hong Kong dollars. Companies reporting today include PetroChina, China Oilfield Services, Ping An, Prudential, Zhongqing Rural Commercial Bank, Zijin Mining, Qingdao Brewery, Dongfu Spring, Guming, Nixon Foods, China Duty Free, Conch Cement, CR Land, CR Mixed Lifestyle Services, CR Pharma, Ecoso, Junshi Bao, KeyMed Bao, and Pek Bao. New stock Shuangdeng list today. It closed at 25.1 Hong Kong dollars in yesterday's Phillip grey market, up 73% or 10.59 Hong Kong dollars from the IPO price. Excluding fees, a 500 share lot yields a paper profit of 5,295 Hong Kong dollars. Investor attention is centered on Nvidia, set to release its quarterly earnings on Wednesday, and the US July Personal Consumption Expenditures (PCE) price index due on Friday. On Monday, US equity markets opened lower and continued to decline. The Dow Jones Industrial Average closed near its daily low, falling 349 points or 0.8% to 45,282. The S&P 500 index retreated 27 points or 0.4% to 6,439, while the Nasdaq Composite index dipped 47 points or 0.2% to 21,449. The Nasdaq Golden Dragon China Index, reflecting the performance of US-listed Chinese companies, edged up 9 points or 0.1%, closing at 7,929. Technology stocks displayed mixed performance. Tesla defied the broader market, rising 1.9%. Nvidia gained 1% and Alphabet advanced 1.2%. In contrast, Apple and Meta experienced modest declines of 0.2% to 0.3%. Intel fell 1%, with the company cautioning that US government investment could pose risks to shareholders and international sales. Pinduoduo reported quarterly earnings that exceeded expectations, resulting in a linear 1% increase in its share price. Bolstered by enhanced stimulus measures from the Chinese central government to stimulate consumption, Pinduoduo's revenue for the quarter ending June rose 7% year-on-year to approximately 104 billion yuan. While this marked the lowest growth in recent years, it slightly surpassed analyst projections. Net profit declined 4% to 30.75 billion yuan, and adjusted operating income fell 5% to 32.7 billion yuan. Yet both figures outperformed market expectations. However, increased US tariffs and the elimination of tax loopholes for discount retailers, including Pinduoduo's Temu platform, contributed to a significant 46% drop in monthly active users during the quarter. Our stock pick today is Immunotech, stock code 6978. Immunotech is a biopharmaceutical company focused on the research, development, and commercialization of T-cell immunotherapy. Its core product candidate EAL is a multi-target cellular immunotherapy with over 10 years of clinical application history, showing therapeutic effects against various cancers. Research on EAL began in 2006 during which the company refined cell culture systems and methods, developing a proprietary technology platform with independent intellectual property rights for producing EAL cells. EAL is a broad spectrum anti tumor cellular immunotherapy derived from T cells extracted from patients' peripheral blood, which are then activated and expanded using the company's patented methods. Following discussions with the Center for Drug Evaluation (CDE) in February 2025, the CDE permitted Immunotech to submit an application for EAL's conditional approval. In March 2025, EAL was included in China's priority review and approval list, and its conditional new drug application (NDA) is currently under review by the National Medical Products Administration's CDE. The company operates a research and production center in Beijing, covering approximately 27,604 square meters, which includes a quality testing building and cleanroom laboratories. These facilities support the preclinical and clinical development of cellular immunotherapy products and are equipped to handle early stage production needs following regulatory approval. All facilities have received cleanroom inspection reports from the Beijing Institute for Drug Control. To address EAL's 6-hour transportation radius, Immunotech plans to establish additional R&D and production centers in densely populated regions of China to accelerate clinical trials and meet future commercialization demands. In addition to advancing EAL's commercialization, Immunotech is committed to investing in its CAR-T and TCR-T cell product pipelines and enhancing its technology platform to develop new cellular immunotherapies tailored to different tumor types and stages, as well as improving the efficacy of existing treatments. Alongside organic growth, the company aims to expand strategic partnerships, pursue sales, technology transfers, and collaborations for its existing and pipeline products. Immunotech will also explore new development opportunities in cellular immunotherapy, including potential mergers, acquisitions, and strategic cooperation. Suggested buy price is 5 Hong Kong dollars, with a target price of $5.45 and a stop loss price of $4.75. I do not hold the aforementioned stock.